Good evening, ladies and gentlemen. Today is the 23rd of April, and generally on Fridays, we see that if there isn't much of a move in the market, there tends to be quite a decrease in strangle premiums. That being the case, today was one of those days where the 3 Mondays in a row we've had a big gap up, gap down situation, and because of that, option premiums haven't really given way too much. And the day itself was a little bit random. We saw big moves in one direction, followed by rapid counter moves and so on. So that being the case, today was an all right day for me. I managed to be up little less than 1% at one point. In fact, when I was trying to exit, I was up more than 1%. But as I was exiting because of slippage and whatnot, just the size of the quantity by the time I finished exiting ended up being up just less than 1% or so. So that being the case, I hope you had a good trading day. This would have been tricky, could have been tricky because the rate at which some of the moves were coming in, people could have got stopped out in either direction. So that being the case, thank you so much for watching. Have a great weekend, and I'll see you on Monday.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. I've just entered the position for today. I've shorted the 13,700 put and the 14,800 put. And this is a very, very wide range of 1,100 points. And the idea more or less for today is that we will continue to stay in this range. So the low that we made of 14,150 should be respected, and 14,500 is the upside that I'm seeing. This is not a strong market, even after yesterday's one-way up move. I don't particularly see any kind of strength in the market at this point. So the view is definitely slightly on the bearish side, but considering that our puts are 670 points away, not expecting any expansion, and might consider taking in more call side credit at some point. Well, right now the view is basically don't do any adjustments for majority of the day and try to capture the decay to the extent possible. We'll keep you posted. Time is 9:26. This is a very wide range, so it should require very little active management unless there is a very drastic up move, which will lead to a spike in the call side IV. And in case today's trade doesn't go so well and we are not in the positive by towards the end, then can also look at carrying forward position because OTM premiums are very good, so can do better hedging and carry iron condors. Okay, we'll quickly go over the adjustment plan itself. A lot of the put side IV spike has come down, which has benefited us. Right now, these calls are a little more than 400 points away, and the puts are almost 700 points away. So the idea is any adjustment that we might have to do will be on the upside. So Bank Nifty, I don't see heading above 32,000 very easily. I think the 31,800 range will act as a resistance. Reliance is not doing anything, and so Nifty right now, the adjustment will be is if we break above this previous high that we made yesterday. Once we head there, then we'll have to start moving up the puts in order to deal with that. But until then, I'm not going to be in a rush. On the downside, don't have an adjustment plan until 14,200 or 14,150. This zone breaks. So more or less the idea for now. For now, the position is quite comfortable. The put side IV has come down quite a bit, which has benefited, and people were expecting once again a big gap down. So in the morning, these puts were available at a very good price. Okay, so we're seeing a continued up move, now holding above 14,400 convincingly. So to deal with that, have moved up the puts to 13,800, and there's a slight issue here. You can see 44,450 is the quantity of puts shorted, and roughly if you see between both the puts long, it should be about 41,550, and so there's a 3,000 quantity discrepancy. Despite being short a position, I'm not allowed to go long, and yeah, even if it's just 75 quantity, clearly I'm short puts, but cannot go long puts because of OI restrictions. So yeah, will not be able to keep the same quantity. So I have to reduce the sizing to balance that. Yeah, unfortunate, but this is how Zerodha operates. So you want their platform, this is how you have to deal with it. People say go work with another broker. Problems other brokers are worse. So you just have to be used to the fact that all brokers are more or less going to have their problems and be crappy on some level. But Zerodha is probably one of the better ones among the rest. Okay, so we've taken out the day's high and we continue to head higher. And to kind of deal with that call side IV spiking, have more or less temporarily moved up the puts to 14,000. In case there's a reversal, we'll have to move these puts back down. So the idea is everyone has short positions, but Bank Nifty now is above 32,000. And yeah, this is making the Nifty quite strong. So to deal with that, have moved up all of the puts. We'll keep you posted. Time is 11:22. Okay, so since had taken on risk on the put side, had taken on additional risk on the call side as well, we were consolidating here with 14,450 acting as some kind of resistance. So to deal with the fact that our puts are now exposed and it's much more likely for them to expand. Okay, so to deal with the fact that I had moved down the puts on this consolidation, once we had resistance at 14,450 on this green candle, I moved down the calls to create a more balanced risk spread with a higher risk reward. I moved down the 14,800 calls to 14,750. So this gives us enough credit in case these puts start expanding, which they have now, because we're making a small downtick from 14,450. These will cover them. This delta neutralizes at around 14,375. So you can say that a down move does benefit. But in a down move, if it's fast enough, the puts IV will go through the roof and expand them. But for now, the idea was to get balanced, and to do that, have moved closer on both sides. Okay, so big red candle and pulling us below 14,400 again, and basically the whole market is moving back Nifty IT everything. And fair enough, so the bearish view kind of paid off, and but at the same time now these puts will really start to expand, so I'll square them off and move to the 13,900. We'll wait for a test of 13,350 and then square these off further and move them down further. Since there was quite a spike in the call prices, that reversal is bringing the calls down a lot more than it's making the puts go up. Okay, so this is a good time to go over how adjustment will work. So right now we have 850 points triangle, 850 points triangle with 13,900 and 14,750. So as per your traditional model, where does the triangle get centered? The triangle gets centered at 14,325. So if I say the adjustment is going to be at 14,350 and a proper break of 14,350. So let's see what's happening. So we're making this down move. This triangle is sort of gaining because delta of this triangle is negative, but much that was above 14,400. Now below 14,400, the down move is actually hurting us, even though this triangle is not centered, because put side IV is spiking in these markets like anything. You're having, like for example, right now triangle delta should be negative, but we're seeing an up move and that delta is actually positive because our mark to market is gaining from this green candle that we're seeing. So when you say, for example, the delta is positive negative, doesn't mean anything, because in this current market where everyone's afraid of what's happening with corona and whatnot, the demand for puts will go up like anything. Remember, pricing of options always comes from demand, supply and urgency. The rate at which people start covering their sold puts is very high. So the demand for options when there is a down move, especially put options, is very, very high, which is why you see that, even though your delta might be negative, a down move in a triangle might actually lose you money. Right now, you see market is making a green candle
Our delta should be negative. As per sensible also, it will say I am 15 lots short, but it will benefit because the rate at which put side IV spikes is very high. So the model will explain it as IV, but basically simple way of understanding is in a down move, people right now are very afraid, and whoever is shorted puts will start covering very fast. Or people who are speculating that okay, now that fall will come, now that fall will come, that fall that they've been expecting for a while, they'll cover, which is why you're getting such good premiums out of the money to begin with. So yeah, that being the case, the next adjustment criteria for this will be if on the downside, if we test 14,350, then we will make an adjustment by squaring off our puts and rolling them lower. On the upside, if we head back to 14,450, then we'll then look at squaring off some calls and moving them higher. Will no longer be moving up the puts. Why is that? I'll tell you why. The calls, like for example, if we make an up move now, slowly head back here, will not go to the same price that they were. Like 14,750 calls when we were here were trading at almost 50. They'll not go back to 50 because of this. When it went up, yesterday we went up. Today also made a dip, and then from there we started going up. So there was no idea of where will the selling come. The market didn't understand that okay, if I'm making an up move, which is against what majority of the market is expecting, where will that up move top? Where will that selling come? Now that the market has realized that okay, around this level we're starting to see selling. This time these calls were we to make a slow up movement, not a very fast up movement. The rate at which it happens also makes a difference. Were we made to make an up move, we will not go back here. If we go back to 14,450, we will not go back here because market knew that last time there was selling that came in. So this time also selling can come in. So last time the fear was much higher on the call side. The call side IV spike was symbolic of the fact that okay, we didn't know where this stops. Now we know okay, here there is some pullback, like Bank Nifty heading to 32,000. There is some selling pressure. So that's the idea. Okay, so now big green candles spiking the call side. Massive green candle coming from the Bank Nifty pulling back above 32,060. I'm not going to immediately do anything to the 14,750 calls. I'm going to wait for a test of 14,450 and a clear holding of that level in order to make any changes. So very simple idea. The put side IV still continues to remain high. These calls will naturally expand when you see that big green candles being formed. Clearly there is support at lower levels is what is assumed, and calls are expanding. They will be balanced to a certain extent by the puts till about another 30 points. I don't think this should give us much trouble. Might lose a point or a point and a half in case we wait for 30 points, but we're going to wait for 30 points and only then will we consider making any changes to the position. As of now, things remain status quo. This is quick expansion of the calls of almost 7-8 points because of two massive green candles. So what wide swings? We see a random out of nowhere in two candles. We see a dip of close to 70 points, and then in two candles we see a rise of 60 points. Yeah, all over the place. Very tricky markets. That's why it's important to get out quick and try and protect whatever you've made. Okay, massive red candle again, right, pulling us to 14,370, and idea remains simple. We're going to wait for a test of 14,350 on the downside or some kind of momentum to then risk off on the puts. Puts haven't really gone up much at all because they are so far away and they're already pricing in a down move. These calls have crashed off quite a bit, almost about 8 to 9 points. So the idea will be to wait, see a test of 14,350, what happens from there, and then start exiting the put side. It's coming from everything. Everything is falling. ID, Bank Nifty, Reliance, everything. So that being the case, we are now testing 14,350. We either need straight 20-point move down from 14,350 or we need it to hold in these levels for a while, at least two candles, to then see what to do, because we're just seeing big candles forming in either direction. Very choppy market. You absolutely have to be on your toes and this is why I prefer doing delta neutral trades when this is the case in the market. Regardless, for now it's okay, just waiting and seeing what happens. We continue to hold here or hold below 14,350 for the next two candles. I'll automatically take off the put side risk as well. Okay, so one change that has been made is that 25% of the calls have been moved from 14,750 to 14,700 because the puts aren't particularly expanding but want to partly cover any further cascade, and at this point market is more or less acting random and need to be better hedged in case. Generally when there's random volatility, invariably that volatility puts you down rather than up. So anyway, moved about just 25% of the puts down. These are now standard bleed, but that's fine, it's just 1 point, and meanwhile the puts will lose a lot more. So that being the case, it's 2 o'clock, 1.5 hours left to go. Currently the idea will be to lock in as much profit as possible. So if we start seeing a trending move, generally the premiums are very high and they can continue to remain high into the weekend, expecting some kind of move over the weekend and like a big gap up or gap down. And the way options are pricing it, they're pricing in a potential Black Monday. So ideal way to get out quickly with whatever points we've captured, and more or less to protect the gains for the day than anything else. Otherwise, in general, Friday's last hour is very good DK. Okay, a lot of randomness and very volatile moves in the market have moved down the 14,750 calls to 14,700, and the puts remain exactly where they are. They are about 450 points away, and the calls are now 350 points away. More or less, yeah, massive up move potentially from this trend line, but then once again rejected. So yeah, prices of options continue to remain extremely high, and this could mean it might be attractive to carry something overnight, but the hedging will have to be on point. Have to do calendar hedging. So regardless, for now, this is the position. We're trailing the stop loss, trailing with a 2.5 point to 3 point stop loss, and yeah, since we have a buffer on the put side and since the current trend now is downwards, we have a partly bearish position. We'll keep you posted. About an hour, 10 minutes to go for market close. Should be further reduction in options prices considering that it's a 2-day weekend, but that might also not happen with expectations of what will happen on Monday. Okay, we have now broken the day's low, the open, and we're now trading at the day's low. The position more or less balances at 14,300, and there's a lot of put side IV expansion, that's for sure. So we're going to wait for a test of 14,300. If we start heading below 14,300, instantly going to get out of the put side, and the idea will be to trail from the call side at that point with just basically a bear call spread. We're going to wait for a 14,300 test. Bank Nifty itself will be pulled to 13,500 at that point. 13,500 on the Bank Nifty and 14,300 on the Nifty. So yeah, we're going to wait for that to happen, and in case it breaches and holds or has momentum, which means it's running away 20-30 points, then we'll get out of the put side and then probably just try to, because at that point 14,300 there will be potentially a lot of more longs getting unwound, but until then not going to do anyway. So this down move has really helped because we spaced the puts so far away and the calls have crashed. So these calls 14,750 and 14,700 have paid up immensely. So this is going to be sort of critical. The intention also will be we'll have to get out of these fast, because for now they're not expanding much relative to the calls, but they will absolutely blow up if we take out 14,300. Okay, we're testing 14,300 and heading lower, and that's good enough for me. Exited all the 13,900 puts and have moved the quantity roughly 60% to 13,850 and 40% to 13,800. So yeah, that's more or less the change. Massive IV spike in these puts. These puts are
very, very far away, but also very, very expensive. Okay, so it's starting to become a little difficult to defend the mark-to-market profit, but more or less don't intend to lose more than 2 points. We are still at the best mark-to-market we've been all day. So what is the idea? I've moved down all the puts to 14,800 and moved down 25% of the calls to 14,650. Now we're seeing this green candle being formed. Not too particularly concerned about this. I don't see us now getting into some short covering move because the pricing of options is not reflecting that. So that being the case, the IV coming down in the puts is great. This has expanded to 50 plus. They've lost 6 points just with one green candle turning up. Calls haven't gained more than 2.5 points. So that being the case, right now we have just 40 minutes to go till market close, and the only thing that we care about is our overall risk reward, what we stand to gain versus what we stand to lose. So we're not going to give up more than a point and a half, 2 points worst case from where we are. So for now, this position is good. If we more or less end above 14,300, these puts will easily lose another 5, 6, 7 points. Okay, we're into the last 30 minutes, and basically 25 minutes till we get auto squared off. We're holding above 14,300, in which case we might see a lot of people who are long options start exiting those positions. My fear right now is an up move. A last minute up move will explode these calls, and I cannot afford to sit through that. So basically, stop loss, more or less, we can say from mark to market perspective, is at 4 lakhs, and we'll keep reducing that as we get into the last 25 minutes of trading. And we'll keep you posted. We might get some good decay of an additional 0.2 or even 3, but we might also end up seeing a big move, and a big move on the upside is a massive fear right now. It should be, because my calls are just 350 points away, and yeah, they can explode if there's a big move. Okay, exiting because we are seeing a very rapid up move. We have to exit all the calls very fast. Yeah, okay. My exact fear played out to perfection. But fair enough. That's the problem. You can't exit larger quantities at once if you're in case you're wondering what I'm doing, I'm just placing orders through this tool to get them to execute faster. Okay, bad ending, could not avoid that up move, and yeah, should have been able to get out of the calls faster, but from an execution perspective, it is very difficult when you're dealing with larger trades. Overall for the day, up, considering the margin we used, slightly less than 1%. We could have been up 1.5%, but if you noticed, I started hitting the exit orders when my mark to market was 4.8, but the rate at which those calls expanded was too fast to react. Regardless, still a profitable day. Overall, could have been a better day had I exited properly, but this is part of what happens in the market. Could have gotten out earlier also, but generally the risk reward of the last half an hour is very good on Fridays. So that being the case, thank you so much for watching. Have a great evening, and I'll catch you next on Monday.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.